Hey, what's up? Welcome to Degen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts, like the chart behind me, which is of Fisker Automotive, ticker symbol FSR. And so here we are looking at the weekly candles after Fisker put in a new lowest weekly close at a price of 73.12 cents. So pretty disappointing to see the week ending on February 16th at such a low price. But I do think there are a couple things in the chart that do offer some hope. I'm going to go over some bearish things, some bullish things. Overall, I'm feeling pretty good about it, but, there are definitely some things to be concerned about. So I'm just going to go over those and, kind of give you my take on the price action of Fisker over the past week. And so here, just looking at the weekly candles, we can see that price has, really over the past month, just been kind of flat, but like bleeding to the downside. We have not yet put in a new lower low. So good, we haven't hit that level yet, but we are getting pretty close. And so one thing to be cautious of is really just like looking at this big red candle here that went down more than 22% on the week. Following that week, it does look like we did get some sideways consolidation forming a bear flag, and then that did break to the downside. We do see this bearish engulfing candle here, and then this kind of stair step down before consolidating again. So it is quite possible this could be another bear flag that breaks to the downside, but I'm hoping that's not the case. And so to kind of go over more of the details of this, I'm just going to flip over to the daily time frame. And so one thing that I think is pretty surprising about this week, on Monday, February 12th, we did start the week putting in this bullish engulfing candle, but then the following day, we did get a sell-off, going down over 5.5% on the day, and then, continuing with some consolidation, and then another breakdown going down almost 3.5% on Friday. But there is one thing that does stand out to me with the chart right now. It's right in front of us. I don't know if you can tell, but it does look like, as we have been putting in lower lows here with the price, while this is not the lowest low, if I were to adjust this a little bit over, this would not be the case. But looking at these candles here, we have been putting in lower lows in the price, whereas we have been putting higher highs in the RSI. And so that is bullish divergence. And so I'm kind of leaning towards this drop that we saw on Friday. I'm kind of leaning towards that being a fake out and that we will see a rally next week, possibly the week after. I think it would be better if it was this coming week. But yeah, I'm just going to go over some lines, some levels that I think stand out, could help us in the weeks ahead. And so one of those levels is this purple line that I've gone over before at a price of 74.67 cents. That was the previous lowest close that we saw, which was hit on January 25th. We now have a new lower close. However, there's one thing that we need to always be paying attention to, and that is confirmation. We got one close below this price, but really, in order to see a clear breakdown, we need to see two closes, two consecutive closes below that level. And so that is kind of why I'm leaning towards this being a fake out. Not only do we see bullish divergence, but we also have only had one close below this, closing the week at this new lower close. Kind of gives retail a bunch of time to panic and prepare to sell their positions before we see a rally next week. But, maybe I'm wrong about that. Maybe, we do sell off. But, I feel like this does seem, a little fishy to me, and that we could be seeing some moves higher. And so that's what I'm leaning towards. And so some levels to be paying attention to as far as, whether we go up or down next week. Of course, we do want to be paying attention to 72.55 cents. We don't want to be putting in a new lower low, and that would not be good. But if we do, if it is just a wick down to that level and we get a close above 72.55 or 74.67, that could have been a good buying opportunity if it does look like, a wick down. And so, I have been viewing this as, if price dips to 75 cents, A couple weeks ago, that's a buying opportunity. 74 cents, that's a buying opportunity. Now with price right around 73 cents, to me, I might add a little bit more at 73 cents, but I'd also be doing that prepared for, a continuation to the downside, that we might be hitting new lower lows. And, if that is the case, I might view that as, a falling knife, and I just want to wait and see where it settles out at before jumping into more shares. But 73 cents, that does seem like, if that gets hit and we get a pull, if it dips down to that level and pulls back up, that's great. But if it goes lower, I'm putting on the brakes. And then so other levels to be paying attention to, really just from these two Fibonacci retracements. I went over both of them, I believe, in last week's video. I just highlighted some levels that seem like they're going to be significant to close above, as far as kind of putting in signals that the bearish trend is reversing. And so one of those from this yellow retracement here is the 786 at a price of 77.2 cents. And that is really just, getting above these wicks that we saw up these past couple days. And, we haven't really seen closes above that level, except for on Monday of last week. So I do think that would be a good level to close above, but really I don't think it's that significant. The next level up, getting more significant as we do go higher, is the 236 from this white retracement at a price of 81.62 cents. And that one, is getting above the highs from these days. So getting a close, multiple closes above that level, would be kind of negating this, bear flag that we're seeing. But it also, could be a fake out. So always good to pay attention to that. Then the next level up, the 50% from this yellow retracement, kind of going back and forth here. That would be at a price of 83.42 cents. And that is, again, getting above the highs of these candles. So really just getting above this consolidation that we've been seeing. And again, with the note on fake outs, if we see one close above it, that could be a fake out. But if we see two, that could really, start to suggest that there's some strength back in the stock. And then the next level up, and I think this is probably the most important one, of course, getting more important as we go higher, but of these, before hitting this high here, but this level is the 382 from this white down retracement, and that is at a price of 87.24 cents, and that is getting above, all of the highs that we've seen here, going back to this being January 31st, so getting above all of the highs that we've seen in February. So I think that's going to be a really key level to close above 87.24 cents. So I'm hoping that happens this week, but it might be the week after, or maybe later, who knows. And then now we're getting into more important highs before this longer term downtrend that we saw. So the top here on January 29th was at 94.3 cents. So we definitely want to be seeing two closes above that. But I do think, we're going to really have to see confirmation getting above these levels first before we could start to see that. And then above that, of course, $1. Hopefully we see a close above $1 by the end of the month. If we don't, it's quite possible there will be some talks of a reverse split. And so I don't want that, but I do think that we could be seeing a dollar by the end of the month, but we really need to see at least one close above it. Two closes for confirmation, but one close as far as setting the clock back for a reverse split. So we don't want that. We want to get a close above $1. And then just a couple more levels here. One, the 786, right around a price of $1.03. But I don't think that's necessarily that significant, because the high on January 23rd here, this big red candle, that was $1.03.2. So this Fibonacci level is just below that. So really, we want to see a close above $1.04, really get two closes above that level. And then, of course, the big $1.11. We really do want to be seeing a close above that. Hopefully in March we get that. I do think it will take a couple weeks before we can get some momentum to get a close above that level. But yeah, these are all of the ones kind of in the near term that do stand out to me. And before I close, I should note this one to the downside. If we do start to to get closes, multiple closes below 72.55. I do think 59.11, this yellow retracement, this extension to the 1618, I do think that could be the next level down if we do break this one. So keep an eye out for 2 closes below 72.55. I think that'd be bad, but I do, like I said, think that this, what we're seeing here, I do think that could be a fake out. We could see a rally next week. But, those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and subscribe to the channel for more videos like this. Thanks a lot for watching.